Hey, welcome back, humble investors. Last week was a rough week, but we finally made it to Sunday. So, what I'm going to do in this video, we're going to talk about that crazy ride that we went on last week on that HUMBL roller coaster. I'm going to tell you why I think it hurts so good. And the last thing we're going to do is we're going to talk about how we can capitalize on this. So, sit back and enjoy. All right, last week, look out, my goodness, was definitely a roller coaster ride. You remember being in a roller coaster and you're going up, all of a sudden you go up this incline, and you can see the top coming, and you can just see the sky above you, and all of a sudden you get to the top and you know what's going to happen. And you're thrilled. You're scared, but you're thrilled. And all of a sudden you just drop and then go through all these whipsaws and everything else. That was last week with HUMBL. Boy, we hit that peak on Monday, $6.64. Boy, we were at the top. And then all of a sudden, we went down and we started picking up speed. Come finishing out Monday on a downward slope, Tuesday, Wednesday, Thursday, and all of a sudden Friday, boy, we hit that bottom at $2.76, and then we got jerked around a little bit, and then we started going gradually back up, and we closed out Friday at $3.50. The ride for that week is over with. Guys, we went through all of that, and it was really nothing in the books, no new news on HUMBL. I mean, the last bit of news we got was, remember that article back in on the 26th of February? Let's review that real quick.
Right. This is the last significant bit of news that we received on HUMBL, and that was on the 26th of February. So there really hasn't been any significant news events to be a catalyst for HUMBL to take a dive in the price of its stock. On Monday, the 1st of March, it hit a high of $6.64. It closed out the week on Friday at $3.50. It did hit a low on Friday of $2.75. And that was based upon really no significant news what's going on, be it good or bad, as it relates to HUMBL.
What we experienced last week was really just the nature of the market, the nature of an individual stock that's part of the market. And what we seen last week was a decline in the market. Some people call it a correction. It's definitely not a crash. A correction is nothing more than 10% from the top. So we're heading in that direction if we're not already there. A crash is 20% from the top. So we're not at crash level yet. But as I said earlier last week, the catalyst for a price increase for HUMBL is going to be the direction of the market. The market's going up. Especially in the tech sector, which is the NASDAQ, then that's going to give us more pressure for an upward movement, provided we have no negative news. This week, it works the same. It also works on a downward market. There's going to be more downward pressure. And I think that what we seen last week was a couple of things. Quite naturally, people taking profit, and also the overall direction of the market. That is the nature of investing, especially investing in the stock market. You're going to have your ups and your downs. And as I said earlier, In order to get up, you got to go down. And if you just look at the overall trend, not only of the NASDAQ or any successful stock out there, you're going to see just that roller coaster ride in an upward trend. Let's review that chart on HUMBL, and also let's take a look at the NASDAQ as
The
well.
chart of HUMBL for last week, the 1st of March to the 5th of March. And as you can see, the high that we had for that week was $6.64. That was on the 1st. And the low for the week happened on that Friday, even though we didn't close out the low, but it was at 275. Now, if we look at this week here, we see that Monday, yes, everything popped on Monday. Then on Tuesday, it gapped down. It gapped down on Tuesday. And then from Tuesday, Wednesday, Thursday, we see the pattern there. But on Friday, it went down to 275, and then it bounced from there, and it closed at 350. But just from last week alone, just 1 week, and I know we can't go off of it, but look at this. We see right there a support of about $3. So that's the chart for HUMBL for last week. Now, here we have a 1-year chart of the performance of the NASDAQ. And it goes back to that old saying that is definitely a part of the market, it's part of the nature of the market, and that is you got to get down in order to get up. And if you look, think about this, guys, and really I want everyone to key in on this. Look at this. This was last year, last March 23rd. We opened, the NASDAQ opened at 6,847. And it closed at 6,861. In 1 year, look what happened. We went from 68 to, we hit a high of close to about 14,000. Look at that trend line. Look at this trend line from here, from March to here. Look at that trend line. If you were to draw a trend line, look at that. It's an upward trend. But focus in on this here. And that proves the point that in order to get up, you got to go down. Here, we see a dip. Hopefully you guys remember what happened in September and October. We took a dip in September. We took another dip in October. And look what happened. Now, if you just isolate the month of March, look, we took a dip. We definitely took a dip. All right. So you see this here in the last week of February, it dipped down, bounced back up. March, it went down. And at the very end right here, we see a dip back up. That's the nature of the market. We can't get around it. It's just the way things work out. And really, it's a matter of two things. Number one is going to be a matter of your perspective, and we'll talk about that. And also, as it relates to that perspective, we should be looking at the cost of opportunities. I'm not saying opportunity cost, because there's a difference between those. Okay? In the business world, opportunity cost basically means you're sacrificing something here in order to gain something there. So something has to be sacrificed. No, I'm talking about the cost of opportunities, which I'll illustrate.
One way to deal with all this volatility is to readjust our perspective. How are we looking at it? Are you going to look at it as that old saying, is the glass half full or is the glass half empty? And I think that's what we need to do here is we need to take a look at and possibly readjust our perspective on what's currently going on within the overall market as well as what's going on within HUMBL. And that is, it's the nature of a stock, it's the nature of the market. You're going to have these periods where it's going to correct. You're going to have these downward trend periods, but that's okay. Our perspective should be, that old saying, hurts so good, or another saying is bittersweet. Hurts so good. It hurts to see your net worth drop like it did last week. Oh yeah, everybody felt it. It doesn't feel good, but you got to realize one thing. Like I said, keep your right perspective. That is a unrealized loss. In other words, it's a paper loss. We don't lose anything unless we actually sell at a loss. I know some people, took their profit. Good on them. That's good. That's a good strategic plan. Some people bought at the top and is a little antsy about it, have a higher level of anxiety about it. We'll talk about that, because what we're going to do is we're going to take a look at the cost of opportunities. So we have to readjust our perspective on this. Yeah, it hurts so good. It hurts to see it happen. But the other perspective is these are opportunities to buy those stocks that you've always wanted to buy that was hit hard. This is an opportunity to, if you believe in HUMBL, to buy more. Last week, everything that happened last week, I was still buying. I was nibbling, but I was still buying. And at the end of the video, I'll show you my actual spreadsheet and show you how much I bought, when I bought it, in the cost basis. What I'm doing right now, this is an opportunity to increase my number of shares. I have a goal. I want to get up to about 2,000 shares. So these are excellent opportunities for me. So let's focus in a little bit on the cost. At the start of the video, I had a slide up there with one of the sayings from Warren Buffett that says that the stock market is a device for transferring money from the inpatient to the patient. And basically what that means is nothing else. It creates opportunities. People who actually sold at a loss, they turn an unrealized loss into a realized loss, all right, because they weren't patient. They seen their net worth go down, and all of a sudden they panic sell. So in the long run, really they lost. Where if you didn't and you sat back, first of all, the market is always going to rebound. As many corrections and crashes as the market has ever had, they always rebound. Always, 100% of the time, you're going to get a rebound. All this does is anytime the market takes a dip like this, it creates opportunities. To illustrate this, let's do this. Let's use HUMBL for an example. Let's say that we 1,000 shares of HUMBL at $6 a share. That is going to equal $6,000. Now, the reason we bought it is because, just like we buy anything else, we want it to go up. We're expecting it to go up. In this particular case, what had happened with HUMBL? HUMBL actually went down. It went from $6 down to $3 per share. Like I said, I'm rounding these numbers off just for the easy math. So we went down like that, and the worst thing that you can do is you can panic sell. Because if you panic sell, you took a unrealized loss, made a realized loss. Okay? Don't do that. Think about it. What caused that to go down? We know it wasn't any news with HUMBL, because the last bit of news we got was actually pretty good news. That was on the 26th of February. There's no earnings that came out, so it's not like we missed earnings or anything else like that. Couple things happened. We already know people were taking profit, as well as, the overall market was on a downward slope, had more pressure for stocks to go down than to go up. So, but it's down to $3. Keep this in mind. Why did you buy the stock? What do you believe that this company's potential is going to be? If you believe that the company has great potential, future potential, then these short-term gyrations won't make a difference. Be patient. Like Warren Buffett said, be patient. If you're impatient, all you're doing is transferring your money from yourself to someone else. Be patient. Know why you bought, stick with your convictions. So this now it's down to $3 a share. So now we're looking at, that is what, $3,000 is worth. Let's do this. Let's project ourselves. Let's go into the future. 1 year. Let's take a look at March of 2022. What do you think the price of HUMBL is going to be? If they execute everything and everything comes off the way it should, we're looking at, and this is just conservative wild ass guess, but very conservatively, 1 year from now, I can foresee HUMBL being at least $20 a share. Think about it. Anybody who sold, if they got in at 6 and they sold it at 3, they're kicking themselves. Anybody who just got in and sold any of their shares from panic selling is kicking themselves. The move from $6 to $20, that's 233% increase. From $3, that $3,000 now is $20,000. You're looking at, that's over 560% increase. That's what we need to be looking at. That's what I mean by the cost of opportunity. As it started to go down, and you'll see from my spreadsheet last week, I was buying, I was nibbling. About 50 shares one day, 50 shares the next day. This coming week, I'll probably end up doing the same. Start nibbling at it. And all that's going to do is increase my number of shares. I have a personal goal of having 2,000 shares. I think right now I'm sitting at about 1475. So I still have a ways to go. I'm not going to go all in. You should never do that. If you're ready to buy HUMBL and you want 1,000 shares and it's currently sitting at $6, I would tell you right off the bat, do not. Regardless of whether the price goes up or down, do not go all in right there. Space it out. Do 20%, 25%. If you're doing 20%, that's 5. There's 5 buys that you need that space out on. If you're doing 25%, that's 4. Space it out over a period of time. See how the market is doing, see how HUMBL is doing, but start building up your positions. We need to do exactly what some of those key investors do. Warren Buffett, Kathy Woods, they don't buy all of their shares at one time. A lot of times they don't do it because they don't want to be responsible for moving the market because they buy so many. But realistically, one of the reasons why they're doing it is it's like dollar cost averaging in. A little bit at a time, a little bit at a time. That's what we should be doing. All right, so this is the opportunity, the cost of opportunities that I'm looking at. Okay, fine. If I pay $6,000 and 1 year from now it's worth $20,000, it was worth it. If I paid $6,000 for 100 shares and it dropped to $3, guess what? I remember why I bought it. Hang on. And if this happens 1 year from now, I'm happy. I'm ecstatic. So keep that in mind, guys. Also, look at it from this perspective here. And really, everything is all about your perspective. Sometimes we're going to have to endure short-term losses for long-term gains. This is going to be one of those situations here. So don't panic. Don't panic sell. Remember why you bought the stock. Figure out what your goal is. If you had a set number of shares of stock that you want to own and you haven't reached that number yet, start nibbling into it until you get that number. Because there's going to be a time when it's going to take off. And all of a sudden, one thing you're going to realize when the price of a stock is at $20, let's say HUMBL's at $20, it's going to be that much. When the price or the market is high, the opportunity is going to be low. When the price or the market is down, the opportunity is high. Which one has a better opportunity for more shares accumulation? At $3? Where would you like to buy HUMBL? If you think that it's going to be there, would you like to buy it at $6 or would you like to buy it at $3? So don't be fearful when the market takes a dive or your stock takes a dive because of the overall market. Well, okay, that's the time to actually buy. And realistically, that's what we're at. We're looking at something on sale. Because think about it, at $20, there's going to be less opportunities for people to get into this stock. And if they get in, it's going to be less opportunity for them to accumulate shares. It's much easier to accumulate shares in that $3, $4 range than that $20 range. I'd rather accumulate my shares here and here to get here. So let's all sit back, be patient, take advantage of the opportunities, realize that we must endure short-term losses for long-term gains. So hopefully this was helpful for you guys. And hey, I'll see you next Sunday, if not sooner. You guys take care. Bye-bye.
Come on now.
That's right. Go ahead and hit that like and subscribe buttons, followed by that notification button. That'll help out the channel. Thanks.